Good day, subscribers. Thank you so much for joining me today. I am Jeremy and this is the Financial Education Channel, and today we're talking about stock market for beginners tips. So basically, if I was having lunch with a friend and that friend said, "Hey Jeremy, can you give me some tips on the stock market?" I would give them these 11 tips that I'm going to give you guys today. Now, if you're new to the channel, you may want to subscribe because I talk a ton about the stock market on this channel. So you know what? Give this video a thumbs up if you guys do enjoy it. Number one tip: do not get caught up in day-to-day stock price movements. Focus long-term on whatever stock you're investing in. So many times beginners in the stock market will focus on what happens in that very first month as far as the stock going up or down. And they'll either get too high on confidence or they'll get too low and they'll be out of the stock market in no time. Say you invest in a stock, you invest $1,000. Say that stock, for whatever reason, over the next month it goes down 20%, let's say. Next thing, you have $800 invested. A lot of people at that point will say, you know what, screw these stocks. You know, this is a scam. I lost so much money already. I'm just getting out of it and getting done. That happens to so many people because they get caught up in that short-term stock price movement. Same thing is sometimes somebody invests and they get lucky and that stock moves up huge right after they invested, and they get so high on confidence and they're like, "Oh, I'm a genius. I need to stuff all my money in right away." No, you can't get too high on confidence. So don't ever get caught up in these day-to-day stock price movements because they're going to move up and down. Don't get caught up in it. Just focus long-term and have a vision. So that goes into point number 2, which is don't get emotional. Don't fall in love with the stock. So many times, especially beginners in the stock market, even some advanced investors, this happens too. They fall in love with the stock, and they fall in love with it so much that they actually get emotional about that stock. If somebody tries to say something negative about that stock, they get emotional, like they get pissed. They're like, "Oh, you know what? You don't know what you're talking about. You're stupid." You know, they get so emotional about it. Almost like if you were to try to attack their girlfriend or boyfriend or something, you know, they get very emotional because they fall in love with that stock and they believe in it so much. And if somebody has something negative to say about it, the other person is stupid and they don't know what they're talking about and this and that, guys. So don't ever get emotional. Don't fall in love with stocks. Stocks are just a way to make money, just a way to make your money into money. Don't fall in love with them, guys. It's at the end of the day, it's not technically your company. So even if somebody was getting mad at your company, just don't get emotional about it. Don't fall in love with it. It's just a way of making money. Number 3, invest in companies that have very strong balance sheets. You want to invest in companies that are rich in cash, rich in short-term investments, rich in long-term investments, and have as low of short-term debt and long-term debt as possible. The reason being is because you're a beginner in the stock market and you might not know the most about companies yet and how to predict future earnings and those kinds of things. So even if your company, say you invest in, even if they have a weak period as far as income goes, at least they have a strong balance sheet so you can sleep well at night. If you invest in a company that has a really weak balance sheet, they have piles and piles of debt, you know, and they don't have much cash in the balance sheet, if that company goes through a hard time, you're going to have a hard time as an investor staying invested in that stock because you know that, man, what if they face bankruptcy or something? They have no money coming in. They have all this debt. They have no cash. You know, you're going to just worry about that, and it's going to weigh on your shoulders. So number 3, just invest in companies that have very strong balance sheets, and you will be okay, guys. Number 4, focus on your game and not others' games. What does that mean? Focus on how your returns are going and not how someone else's returns are going. So many times, you know, people can get caught up in, "Oh, this person got this return, so therefore I stink at investing. I'm not doing good." Or that person on TV, they're getting this return on investment. I'm beating them, so you know what? I'm a genius. Don't focus on what other people are doing as far as their returns. Focus on what you're doing. I was able to get 30-40% per year for 5 years straight, and I focused on myself. I didn't focus on what somebody's doing on TV. I didn't focus on this person or that person. And you guys shouldn't focus on what I've done. Just because I've gotten those type of returns in the past, you shouldn't say, "Oh, I need to get 30-40%. No, absolutely not. The name of the game is to try to do better than the stock market does, which the stock market on average goes up around 8% per year, and focus on minimizing losses. That's the name of the game. Focus on your game like this. Focus on your game, guys. Number 5, invest only in companies that you actually fully understand. If you're investing in a company that you don't fully comprehend, That's a big mistake, guys, because how are you supposed to know where their business is going if you don't even fully understand it? How are you supposed to know, how are you supposed to have an idea? You got to fully be able to understand that company, understand their financials and all those sorts of things. So then you can have success. Because if you're just throwing money at a stock that you don't fully understand, then that's what you're doing. You're just throwing money. You're basically gambling. So I stay in my circle. I understand retail really well. I understand electronics really well. I understand, some service industries very well. I don't understand as well some commodity type companies, like coal companies, a lot of oil and gas companies I don't really mess with because I don't really know where the prices of commodities are going, generally speaking. I don't really invest in banks very often. I don't really invest in car manufacturers ever. So those are some companies that I don't quite understand as well. So I just stay away from those guys. I just stay away from those. They're harder to read as far as their financials go. For me, it's not the ones. Maybe you understand those ones and you can invest in them, but you just want to stay in your circle of competence, guys. Understand a company fully, and then you can go ahead and put your money in it. Next one up, number 6, invest slowly. Invest slowly. So many beginners in the stock market, they put so much money in right off the bat. They just pour money in. They're like, okay, you know what? I've been researching stocks for 3 weeks now. I've been watching all Jeremy's videos and I've been researching all these external websites and stuff. I understand it. Let me just funnel all my savings into these stocks right now. No, take your time, invest slowly. If say you got $10,000 you want to invest over time, put $1,000 in it first and invest it. And then a few months go by, then put another 1,000. Then a few months go by, and if you're still feeling confident and whatnot, and you like investing and whatnot, then go ahead and put another 2,000 in until maybe over the course of a year, then finally you have that full $10,000 to actually invest in the market. But don't rush out there and just throw money at a stock because you're still in the learning game, guys. If you've been learning for 3 weeks or even 3 months, let's say, you're still very much a beginner in the stock market. It takes you really 2, 3, 4 years to really fully understand everything that's going on in the markets, understanding companies, and I've researched, a backlog of companies. Number 7, start with buying one stock. Start with buying one stock, and you can say, Jeremy, but they preach diversification when you're learning about the stock market. Be invested in, 5, 10 stocks or whatever. When you're starting out, guys, just start with one stock. The reason being is because, one, you're only investing a small portion of your money that you could be investing in that stock. That's reason number 1. Reason number 2 is so that you can just focus on that one company, pay attention to it, pay attention to its earnings, pay attention to the price movements over the months and whatnot in that stock, and just take it all in while you're just focusing on that one stock. You can still research other stocks in the meantime, but just actually be invested in that one stock. Once 3 months, 6 months go by, however much you feel comfortable, then you can go ahead and funnel some more money in like we talked about, and then go ahead and buy a second stock that you like a lot. And then you can start adding a portfolio, and maybe by, a year and a half in the market, then you have a portfolio of 3, 5, 10 stocks, whatever you feel comfortable with. Me personally, I usually never invest in more than 5 stocks. Usually it's around 3 stocks most of the time. So, but it's up to you, whatever you feel comfortable with. If you like 7, 8 companies, invest in 7, 8 companies over time, but start with just one and then add another and then add another. Go like that, guys. Number 8, remember you're buying a business and not a stock ticker symbol. This is another area where so many people get confused, guys. At the end of the day, you're buying an underlying business. You're not just buying a stock ticker symbol. So many people get confused. That's why it's so important to look at the business and be a smart business person. Because if you're a smart business person, it's going to help you make great judgment calls as far as, if a company's headed in the right direction strategy-wise. You're buying the underlying business when you buy a stock. So many people just throw money at a stock and they think of it as like a stock ticker symbol, and however much it goes up or down, it's just a stock ticker symbol. No, you're buying the underlying business, and how that business performs is probably going to be how that stock performs. Sometimes, the stock can go either way. Sometimes the business can be doing really well and the stock will struggle, and sometimes business can be doing bad and somehow the stock goes up for various reasons. But most of the time, the majority of the time, that stock will move depending on how the underlying business is doing, depending on how the profits are going, depending on how the growth is going, all those sorts of things, guys. So remember, you're buying an underlying business. Number 9, listen to yourself first and foremost. I talk on this channel a lot. I break down stocks every single week. I break down, Facebook, Netflix, whatever stock. I break down a stock every single week. You might be investing in that stock. You might be looking at that. Just because I say I'm not buying it personally, that doesn't mean it's not a buy for you. Same thing if you watch, Jim Cramer on CNBC, or you watch some guy on Bloomberg, or whatever channel. Just because we don't believe in a stock doesn't mean you shouldn't invest in it. A lot of my best investments ever have been stocks that everybody said, oh, don't invest in that. Stay away from that stock. No. That stock's horrible. Don't buy that one. And I made a lot of money in buying some stocks that everybody else pushed away. And I got in before everybody else. And then everybody was like, oh, that's not so bad after all. And the money started piling in. So, and think about yourself first and foremost. And there's been so many stocks I could tell you about that I wouldn't invest in. Amazon for years, Netflix for years, Tesla. Some of these stocks that had super high PEs and maybe not the best balance sheets. I didn't want to invest in them just because they were high PE stocks. They weren't value, in my opinion, whatsoever. But they still performed amazing. So just because I say I wouldn't invest in a stock doesn't mean you shouldn't invest in a stock. Just same way with anybody on TV you watch or whatnot. Believe in yourself first and foremost. It's your decision at the end of the day. You decide your fate, guys. Believe in yourself. Next up, number 10. Don't mess with margin ever. Since you're probably a beginner and you're watching this, you probably don't even know what margin is yet. You will at some point. Margin is an account you can make in a brokerage where you can invest $2 for every $1 you have. So you can basically take out a loan, take out debt to invest in stocks to try to make a higher percent of return. I thought I would be successful at this because I was making so much money from stocks for so many years in a row that I was like, you know what? I want even more money. I want margin money because now I can invest $2 for every $1. Instead of making, let's say I was making $50,000 a year from stocks, now I can make $100,000 a year from stocks. If I was making $100,000 from stocks, now I can make $200,000 because I got $2 for every $1 I had before. Problem with margin is you will end up getting greedy. More than likely, you will start investing, maxing out that amount of margin. And then sometimes in the short term, those stocks can move down like we talked about. And when those stocks move down, you're forced with a margin call. And you either need to pour money into that stock or you need to sell off shares of that stock. So that's what happened to me. Short term, all of a sudden my company would struggle. And next thing you know, I'd have to sell a bunch of shares to cover that margin call. And then on top of that, you're paying generally between a 6 and 7% interest rate. So you're paying thousands and thousands of dollars of interest, guys. So don't ever mess around with margin. Warren Buffett has a great saying about margin. If you're smart, you don't need it. And if you're dumb, you have no reason to use it. And I don't know which category I fell into. Maybe I was a dumb category, but I had no reason to use it. It screwed me up. I lost so much money the year I used it, which was 2015, which was technically last year. I lost so much money, and then I paid out over $5,000 in interest. So I lost a ton of money because I started focusing short-term, doing short-term trades on this margin. I lost a ton of money because I was doing on interest. So don't ever mess around with margin, guys. Take it from me. I knew not to mess with margin, and then I just got greedy and I started messing with it. And learn from me, guys. It's not a smart thing. Don't matter how good of an investor you are, it's very hard to manage margin. I would not mess with it at all. So I hope I made myself very clear on that. Last one, tip number 11, guys, the last one. To be a successful investor, it takes a lot of work. You must understand it's a lot of work, guys. It's a lot of damn work. You got to research so many companies. These companies you research, they might not even be the one. So you need to keep researching and read through the financials and read through the balance sheets. And you got to understand the business model and comprehending all those kinds of things, guys. You got to track that stock before you invest in it and see how it's doing. It's a lot of work that goes into it. So if you think it's just going to be easy just to make 20% a year or 15% or 10%, it's not. If you just want to make what the market goes up or down each year, you can just put it in an index fund or something like that, some type of indice. That's fine. You're just going to do as well or bad as the market. But if you want to be a stock picker like I am and like a lot of other people are, it takes a lot of work. You got to be willing to research for hours and hours and hours. If I could tell you how many hours I've spent researching stocks over the course of my 8 years of investing, it would be in the thousands of years, if not the tens of thousands of years, guys. It is absolutely amazing how much work it is. But it really pays off if you can make 15-20% a year. Say you make 30% a year, guys, it will really pay off for you. It will, absolutely, because you're going to be making your money into a lot more money. And then hopefully, as long as you minimize losses when you do take losses, you'll be able to retire hopefully a lot earlier in life and just live a general better lifestyle. I hope you guys enjoyed these 11 tips today. If you're new to the channel and you haven't subscribed, you may want to. I talk about personal finance on the channel. I'm an entrepreneur. I give entrepreneur tips on the channel, and we talk the stock market every single week, just like we did. Let me know in the comments section if this video helped you guys today. If it did, leave a thumbs up on the video. Thank you for watching, guys, and have a great day.